Thanks for watching. No, that's not good.
No, that's not good because we're right at the start.
We're right at the start. Okay.
Can I tell you something? Can I start off with a little bit of an anecdote, TK?
Sure. Sure.
I'll tell you. I remember we're getting some work done at the house, and now I remember why the hell I am not a general contractor anymore. I can't believe, TK, we're just changing the countertops in the kitchen and the backsplash, okay?
Mm-hmm.
It's a nightmare. And I can't believe how, like, you know what? When I used to be a general contractor, I'd have all these trades at my disposal. So, like, to do a little bit of whatever, it didn't really sink in how much effort was involved in actually doing things, right?
Mm-hmm.
So, like, just to get a countertop and a backsplash put in actually involves 4 trades, which is crazy.
Mm-hmm.
4 trades just to.
We got a plumber.
We got a plumber.
We got the
Multiple times. He's got to come disconnect and reconnect. Unless you're a super handy guy, then maybe you can
got an electrician. You probably got some outlets that are
electrician has to come, right?
Okay.
Painter.
A painter.
Painter, because they really fuck things up, man.
Yep.
Right?
They're there to do the countertops. They're not there to protect your drywall.
They are not there to protect anything. Like, I had to say, hey, guys, do me a favor, please. Like, get those extraordinarily heavy pieces of marble out of my garden, please. Right? Like, I think the garden work was more than the counters, TK, right? So it's like, get those goddamn counters out of my garden. What are you guys doing? Everybody is just an animal. But so these guys, you know, they're hired to dismantle the backsplash. And you know, they didn't protect the rest of the house from the impending dust storm that they created, right? So, like, now I need a cleaning crew. So it's actually going to be 5 trades.
It's 5 trades. Yeah.
And you can
you
imagine.
Gotta get your ducts clean too, actually.
I'm going to have to get my
ducts cleaned.
Sure.
You remember that story, you know, if you give a mouse a cookie?
If you give a mouse a cookie.
You never read that story to your kids?
Is that what you said?
Yeah.
Give a mouse. No, I've never heard of giving mouse a cookie.
Some of us had better childhoods than others, but that's okay.
I suppose, yeah.
So
sorry,
you know,
you
if
had
you give
to go
him the
through
cookie, then he needs a glass of milk, and then, you know, if he's gonna get a glass of milk, then he's gonna have to wipe his face or whatever, right? Yeah. So that's what it is. You know, you started a renovation. Here you are. You're off to the races.
But like normal people that didn't live a previous life as a general contractor to like think, like, hun, let's just change our backsplash and our countertops, and we're gonna hire this company. They're gonna take care of everything.
People don't do it. I go into the houses after they've lived in them for 30 years. They don't do it. They literally just do, like, most of the properties. These are the smart people, actually. They have not done anything other than, well, the roof was about to go, so I got the roof. And the furnace died in 2017, so I changed the furnace. And, you know, we had to put in some new windows because there was a rebate on those. But as far as, like, you know, most of the houses were built pretty quality. So that hardwood floor, like, they're happy. You know, the paint that they did 20 years ago was the second time they ever painted in the house that they've been there for 30 years. Right. And these are the people who I believe are the happiest, and I believe are financially, you know, the most wise.
Well, I mean, as people are staying in their houses now, because I mean, that's apparent, right? There's no inventory. So people are staying put, right? More than previously, anyways. I mean, are people that thought that they were going to move staying put? Like, aren't a lot of them doing stuff like this? It's like, you know, Harvey, if we're not moving again, you're changing this goddamn kitchen or I'm leaving you.
You know what? I don't think so.
You don't think that happens?
I just look at my whole neighbors. Until I moved in 10 years ago, my neighbors were all like, what's wrong with our houses? And then, like, a couple of them kind of saw what I was doing. So I saw a few renovations going on, but for the most part, you know, people are just happy to be living in their home and they live there. It's so funny because me and you have this perspective, like, you know, you got to buy a deal and you got to renovate, you got to fix it up, you got to buy a new house, you're going to upgrade, you're going to pay off. Like, most people don't think like that. Most people are just like, I bought the home, I tried to pay off the mortgage as fast as I could, and then I stayed.
I mean, listen, though,
what's next?
But when you buy something with the specific intent to fix it up, I mean, you kind of got to fix it up. There's only so long that the Mexicali
That's
backsplash was
why
going to
when people
last
do
around here, right?
renovations, they
I held on
and you sell a turnkey property.
as
That's
long as I
why
could.
it's so attractive, right? There's more people looking for turnkey properties than there are for the fixer uppers because most people
Yeah,
just want
because
to move in and enjoy.
this sucks,
They don't want to
man.
go through that stuff.
I don't want to deal with this. And so now
Yeah.
I got a plumber here, and hopefully, you know, obviously he didn't have a part, so he had to
Yeah.
leave.
But
Right. So
we have a guest, right? So we're gonna
we're
cut
gonna
to the
bring him on
guest.
right
But
now.
one thing I did hear was that someone is doing a big job. Recently they were telling me easy to find contractors right now.
Easy to find
Easy to find not
Holy
electricians.
shit.
There's a couple guys looking for electricians. I noticed that they're
You know
a little
why?
bit.
You know why? Do you
Why?
want to know why?
Electricians?
No. Do you want to know
Oh.
why it's easy to find contractors right now?
Why is it easy to find contractors?
I wrote about it months ago, and we talked about it a long time ago.
You predicted this.
Everybody starts becoming a general contractor. Right?
Absolutely.
Everybody starts going, man, I can make a lot of money because I got all these contacts and all these people are like, could you do this? Could you do that? And it's like, you know, why am I letting all these guys make all the money? Right?
Yeah.
Why am I letting my boss make all the money? This is enough.
If someone from the show messaged you to say, hey, Daryl, I need new countertops. Would you like general contract that?
No. God,
No.
TK,
Okay.
so many people offered
so
me
not
jobs.
Everybody wants to be a general contractor. Then,
well,
right? Yeah.
Because I am not saying everybody wants to be that.
Yeah.
But I mean, I got to think that there's a lot of people that are like, you know, with the old countertops with like the stain from the kettle, right? Or
people are comfortable.
Bubbles.
People are comfortable.
People are comfortable. I get it. Well, speaking of comfortable, I mean, this guy gives me a comfortable feeling every time I watch his show. Now would be a wonderful time to press that subscribe button down below because we need more people looking at us.
You know what? There's been so many more subscribers lately that have just been jumping on. Things have been happening like
because we're asking them like
something.
So
maybe
like
that's what it is.
When you ask, you have a chance of getting. So please subscribe hit the like button.
Hit the like button.
Share this with somebody that you love that may get some value out of this. And don't forget about the Canadian Real Estate Show Clips channel if you want us in limited doses.
Yep. If you don't have time to watch a whole hour episode and you just want to know what the best parts were of this episode today, then check out Canadian Real Estate Show Clips.
And if you are looking to have a good time, check out the Frankfurt Report on Twitter. Baby. Press subscribe. He seems like such a nice guy, right? Doesn't he?
We're happy to have him.
Is it just me? I love having him on. I prefer having him on when no one else is on because he's going to actually get to talk today, which is amazing.
Welcome.
Hey guys.
Welcome back, Mark.
Good day, sir.
You're looking extra like happy and it's like the sun is shining on your face. Like you're just
feeling
like today is just a great day.
Hey? I tried to block the sun out and it's just coming in.
Don't worry about it. That's good.
You know what?
I feel like this is a whole new light right now. Forgive the pun.
Right.
This is why he gives you that feeling, right? He's just so full of energy and light.
That's right.
Welcome to being another repeat guest on the Canadian Real Estate Show. We're happy to have you back.
Yeah, glad to be here.
We're always happy that usually I'm the smartest one in the room, but today it's you, so that's okay. No big deal, right? But we want to talk.
Is that right, Daryl?
I agree 100%. Listen, I'm just here. I'm just here to run the editing board. That's all.
That's all. I'd like to just kind of hear from you. I mean, what's going on out there, Mark?
Good timing.
What's the news out there right now in the Canadian real estate market with all these different announcements we've been hearing?
I mean, yeah, prices are going up. Supplies way down, as I'm sure you guys have seen. And
impossible.
Isn't this crazy?
It's impossible that prices could be going up.
Prices are going up.
Yeah, looks like it. Well, no one wants to sell their home.
Sure. Can you blame? Yeah. Well, why would you?
Why would you? Explain that to me. What do you think the mentality is? Why a seller right now doesn't want to put their house on the market?
Well, they're not being forced to, right? Because the banks are propping everything up. So even if your payments have gone sky high, you're not really seeing that unless you have an adjustable mortgage. And it's a declining market, or at least it was, for the last year or so. So if you're even thinking about selling your home, you're going to wait. You want to see how you want prices to go back up to those 2022 levels, right? Where they were last year. You're not going to sell now, and you're going to wait and see which way the wind blows.
Especially when prices are going up a few percent a month right now, right?
Yeah. Why not
What
wait, right?
the hell is going on? Why would I sell right now? That's crazy.
Yeah.
So, but hold on a second. Is this real? TK, pinch me. Can you reach over and pinch me? Does this work? Damn.
Did it work?
Is this real? Like, how is this possible? How are we like, isn't everybody waiting for a recession? And like, isn't the Bank of Canada trying to destroy employment right now? Didn't we just have the biggest rate hike cycle of all time?
Fastest we've ever seen,
steepest,
I think.
craziest, and now what? Nothing.
Yeah. I mean,
How?
they're going to keep on trying to induce that recession. Like,
How?
I would think that they're still going to hike.
You're
If
still
the Fed,
thinking that they're going to hike.
I think at least another 25. Yeah.
Another 25. So just a little shot off the bow, right?
A little bit.
Hey, what are you guys doing? Enough of this. Enough of this.
Well,
But what about? Go ahead, Mark.
The bank doesn't want to see prices float back up either, right? They don't want to see people refinancing and going on vacation and spending and doing renovations. They don't want to see any of that. So I have a feeling they're watching the market fairly closely. They don't want to see prices go back that high either.
Let's just go to your point here so we can keep, there's lots to unpack today and I want to hear your opinion on all of it. You said that the bank is keeping everything afloat. So explain to me what the bank is doing and what they're doing to prevent people from essentially being forced to sell.
Well, the banks, like the mortgage lenders,
yeah,
they're extending amortizations. So if you're at a 30-year, they're letting you go to 35, 40-year amortization, which lenders traditionally don't do. They're also allowing negative amortizations. So if you have a variable rate mortgage but a fixed payment, so that's when prime rises, your payment doesn't go up with it. All that happens is that a larger percentage of your payment goes towards interest rather than principal.
Mm-hmm.
But a lot of these borrowers, the rates have gone so high that their payment no longer covers the interest payment. So what the banks are doing is allowing them to tack the difference on. The difference in payment that they're not making goes on to the size of their loan. So
don't
their
worry
loan just
about
keeps
it.
on getting bigger.
Okay,
exactly.
Don't worry
now,
about
what type
it.
of loan
We'll
to
figure
value,
it out together.
What type of loan to value would someone have to be at on their loan to the banks to authorize that?
They're not saying. The banks aren't really giving a lot of details as to
Are they doing appraisals? Are they doing reappraisals? No. So what the fuck are they basing everything on? This is amazing.
Exactly. Yeah.
Wow, this is great. Okay, so what does that mean? So anybody can get a renewal if they're willing to accept the rate right off the bat that they're offered. Like, don't look at nothing. Nobody look at nothing. Just this is what we have to do to get your number close to what you're paying now.
No, these are for borrowers who are currently in the middle of a term, right? They're not at renewal point yet. They're making their payments right now.
Mm-hmm.
So in normal times, they would have to hit a trigger rate, and
right, because they're variable. Right.
Variable.
Okay.
But the banks aren't doing that. They're letting them negatively amortize. They're not adjusting their payments upwards because the borrowers can't make their payments.
Oh, that's crazy. What does that do to the payments?
Daryl, just before you joined us, Mark, Daryl got to have a claim to fame because he had a little Substack that he put out where he was correct that now there's going to be a higher availability of general contractors, which there are. Right. So my point here, which you guys can go check out a link right here where I said it in the past, probably doesn't exist. But I was saying that this whole trigger rate extravaganza was going to blow over and it's just going to be another deferral cliff
you compared it to.
So that's exactly what happened.
Yeah.
Mm-hmm.
You know, there's so much talk, so much energy people put into putting out the trigger rates are coming, like a lot of big names, people who are in the media and everything else. And in the end, the banks are like, yeah, there's a bunch of people who are going to be coming up to their trigger rate, but we've got another solution here that nobody thought the banks would be willing to do.
That's the thing. That's the thing is they keep moving. Like if you're looking at it from the perspective of these are the rules, this is what they're saying, right? Yep. And this is what should happen based on that. But every time, and this is what keeps happening, like every crisis, it's like, well, and this, you go back and I keep saying they're not going to let it happen. They just keep printing money. It's an easy solution. Somehow they put more money in the system one way or another. They print more money and the thing has to keep going. So like, isn't this so reckless? Like, isn't it crazy?
Yeah.
Isn't it not completely against what the market is trying to do to itself? Like, it's unnatural, right?
Yeah, and OSFI just said that yesterday. I think the one of the heads of OSFI, I can't remember exactly who it was, did a speech, and she said, it's great that people aren't losing their homes. It's great that they're extending these amortizations, but OSFI is well aware that they're increasing their risk. This is risk being put on the banks by doing this. So every time you do this, you more and more increase the risk. Like, you can't do it forever.
But I think the bank knows the game. They know the real estate leverage game. And they're like, I'm going to leverage ourselves, myself, the buyers, everybody else. And if we all keep doing that and the market goes up, it's going to basically prevent us from falling, which is what, we always talk about in the show, the difference between an investor and a speculator. I mean, that's what the banks are doing, except they're just really powerful. It's similar to what BlackRock or maybe not Zillow, but some of the other, big tech sort of corporate buyers, when they were buying neighborhoods, right, is that they were trying to control the narrative as far as what the market was doing and how much people were paying for homes. And as long as the market went up, their strategy worked. And I think that's what the bank's interest are like. Let's keep pumping. Let's let this market go up.
That's
further.
What saves everybody.
Everyone's going to be.
That's what
when they're in real trouble, they'll sell.
That's what bails everybody out. Somehow, miraculously, magically, prices going up again, right? It counterbalances some of the shock and some of the inability to finance or fix or refinance when the time comes, right? So like, I'm renewing it in the next little while. So I'm like, fuck, man, like, rates got to come down as soon as possible for my renewal. I don't really care about anybody else's, but for mine, right, I want it to come down and then they can do whatever they want. But in the meantime, it's like, what the hell's going on? 1 minute I'm watching the 5-year bond and it's pushing 5-year terms down, right? And next thing I know, they're up again. What happens to people that are renewing now with these? Like, I want to go for a longer fixed term now. What kind of ringamaroo am I going to have to go through? And keep in mind, like, I'm self-employed. This is a nightmare coming up for me, right? But like, what are people like me? There must be a lot of people.
What are rates
like
right
me,
now?
right?
Yeah, what are rates right now, Mark? What are rates doing?
Like, a good rate for a purchase, an insured purchase, is around 4.5. If you're taking out money,
so that's like the best 5-year closed fixed rate that you can get.
Everything's perfect. You're around 4.5, so insured.
And you're an employee with a T4, like a proper, right?
No, you can get insured if you're self-employed. It's a bit more difficult, but you can do it. So that's still available. But these people that are renewing, they're kind of at the mercy of the banks for right now. So your lender's going to give you a renewal rate, but because rates are so much higher, you're kind of limited as to whether or not you can switch.
That's why those prices need to go up.
You no longer qualify to change over banks. You're with CIBC. You were on a 3.3% 5-year fixed term. It's maturing this year. What would you expect that CBC would be giving you for a 5-year fixed term going forward?
It's going to depend on the client. It's going to depend, right? If you're you're golden and they know you're golden, I think they're going to be more competitive.
You're golden, so you're golden. You're good. Nothing's, but you don't qualify to go maybe somewhere else just because maybe the amount of debt you have or something like that. Maybe you're borderline golden, maybe not golden. But what would you expect? So like 5.5, is that kind of like the?
I'd say low fives. Probably.
Low fives, okay.
Yeah.
And then variable right now, if somebody would be going into a variable rate based on average discount on prime, what would someone expect?
You're gonna be around 5.7 if it's insured. Yeah.
Insured.
Now, if it's uninsured, you're gonna be around 6.2.
Yeah. What if you go private? What about private?
Private on a first, 10% probably.
10%. Oh,
so that tells me that the banks are still on the bond market is still heavily favoring rates to come down.
Yeah.
Heavily.
Yeah.
This is not something that is being assumed to be lasting for a very long time.
What do you
Right?
mean? The video title he just put out is longer, right? Like higher for longer.
The
Tell me.
market's fighting them, right? The market's fighting the Fed. They're fighting the Bank of Canada.
Job market, everything. Yeah. What? Tell us then. Tell us about your last video. What?
Well, Tiff Macklem, the Bank of Canada governor, said that we're going to be going higher for longer. They're not going to drop rates, but they're going to keep where they are until, well, they say until inflation's back down to 2, which is supposed to take until the end of 2024. So that's what, another year and a half that we could be at this level. But the markets don't think that. They think that something's going to break in the system, and the banks will have to reverse.
So something would break.
Something has
either
to
the
break.
economy
Hasn't
or inflation.
broken yet, right? The bank system has not broken yet. Is that what we're really saying? Is that what people think?
Something, right?
Only
they
like
exactly
5 of the biggest banks like on the planet just failed in the last month, right? But everything's fine here, everybody. Don't worry. Everything's cool.
What do you think about the US inflation rate coming down to 5% in March?
Didn't ours come down too?
We don't have our data yet. That comes out next week.
Yeah, US
is down to 5%, which is great. You know, because everything was sky high last year at this time, especially gas. But their core inflation is still fairly sticky. So I could see us getting down to 3 and 4% fairly soon, but maybe even 4%. But I don't think we're going to get back down to that 2%, especially in core inflation, as fast as a lot of people are hoping. It's as fast as the markets are hoping.
Not if real estate goes up.
Not exactly. We start going back up.
Yeah, real estate was their big sort of like, hey, if we can, control the real estate and housing prices, that'll sort of help with the overall core inflation numbers, right?
Yeah.
But that's working against them too.
Okay, so hold on a sec. Why do we or anybody, well, I'm not going to lump myself into this group, but why do people still believe this guy, Tiff Macklem? Like, is there a reason to actually believe what he says? Or is it like a tool? Like, is he using the media as a tool to hopefully manipulate the market a little bit? Because, I mean, do you believe a word this guy says?
I don't. I mean, he's a politician like any of them. You can never really believe what they're saying, right? You have to look at their motives. So of course, I think everything in his press conferences is no doubt orchestrated to get the market to move a certain way. Same with the Fed, and that's what forward guidance is about.
Yeah,
it's just to do it to get a result without having to do the action.
That's right. And not having to actually do the action ever, right? Like to be like, we're going to do this. And, oh yeah, you know what? You guys all reacted to that, but no, sorry.
The higher rates for longer, what would be the motive there?
To get people to not, so we don't take on more debt. So excuse me. So variable rate holders, those with floating debt, don't go out and buy a car. Don't go on a vacation. Don't use their lines of credit. He just wants people not to spend. He wants us to slow down spending, and that would be why that's his end, right? Is to get Canadians scared.
So, but it's not working, is it?
Without
working?
having to actually raise rates anymore to be able to cause that same effect. It's, hey, how do we scare people to be able to just like stop their spending on their own and actually reel in their debt a little bit as well?
Exactly. Without doing the thing that is going to break the system, without forcing those higher cost of borrowing that will cause stuff like SVB, without actually having to do it.
So where do we stand right now? I mean, we've got the market's going up. We've got, jobs are still healthy. We've got inflation numbers coming down. I would assume that we're going to see a lower rate of inflation. I don't know what number that's going to be, but I think that we're going to see our March numbers come out that are going to be much lower than, what they were before, whatever that means. As far as like, people who are going to be borrowing money and stuff like that, like how do we advise people when it comes to, taking on debt or making decisions based on where the rates are going to be? Like right now, we know that the rates are high. You're a firm believer right now that rates aren't going to be coming down anytime soon.
I am, yeah.
Okay. So if somebody's coming to you right now and they're in trouble and they're saying to you, Mark, geez, we can't afford these payments. We can't afford our house, we can't afford to, do the things that we need to do, you're sometimes, the only option that you can give them is to sell.
Well, right now, because fixed rates have come down a little bit. So if you're in a variable rate mortgage and you're paying, say, 5.7 or 6%, you can still lock in for, say, a 2 or 3 year term at low fives. So that is saving some people some money, being able to have that option. A few months ago, when fixed rates were in that 5.5%, it didn't really make that much of a difference, right? But a full percentage difference, I mean, that does help some people. So I see a lot of people now locking in at 2 and 3 year terms to kind of wait to see which way the wind blows over the next couple of years, right? If the bank does reverse, if something does happen, they don't lose out too much. But if rates do stay high as they are, then they're kind of protecting themselves.
Are people paying the 3 months interest? So if you got like a 3-year term left, but now you want to go to a 2-year term fixed, closed, you have to pay the 3 months interest penalty?
You do. You do, yeah. If you lock in for the remainder of your term, there's no penalty, but any changes to the term of your mortgage, then that's technically a refinance and you do break your mortgage.
And if you just lock in at the end of whatever's left on your term, what's the rate that they're going to give you? Is it a discounted rate or is it?
Not from what I've been seeing. No, it's not a blended rate. It's whatever they are offering based on the borrower at the time. So if you can't qualify again to go somewhere else, I mean, the banks know that. So I've seen them offer fairly uncompetitive rates, right? The homeowner comes to me and say, hey, they're offering me to lock in at 4 years at 5.8%. Can you get me out? And I can't, and the banks know this. So they're offering some higher rates to lock in. Yeah.
So, but doesn't it seems to me, at least from the outside, and TK, you're on the ground. I mean, there's multiple offers all over the place. Like, doesn't it seem like the market has absorbed these rates? Like, people are making these offers assuming that they can close the deals. I'm thinking, at least the majority of them are, right? So they must either have a bunch of cash or enough cash and able to make the payments on these crazy monthly payments at 5.5%, 6% on these houses. So has the market actually just absorbed these rates and chugged along? Like, is what's going to stop the market from going up now?
Are you asking me?
I'm asking anybody. I don't know that fucking answer. That's for sure. Remember me? I'm the dumb guy in the room.
I mean, I think that there's a lot of people that stayed on the sidelines all last year, and a lot that couldn't get in 21, 22. So I think they're the ones that are jumping in. There's still money out there. We've talked about that before. There's still lots of people with money out there that want to get into the market. But the rates really haven't affected them.
But it's money with high paying jobs and like a big enough down payment, or it's people with like a bunch of cash so that the payments can be affordable.
From what I've seen is high paying jobs, right? If you're a couple, you're making 140,000 a year. I know most people don't make that, but there's lots that couldn't get in during the height. No, total.
That's total. A high income now for a household.
I live in London.
Right. Okay. Sorry.
Right. So
that makes a big difference. Yeah.
So let's say in London 2 years ago, even or at the height, 140
I live in London.
Well, the price point there, that's a good income to qualify.
Yeah, big difference.
That's a decent income. But even with that income, you weren't getting in at the beginning of 2022. 140K now, I mean, that'll get you higher than the average price. So that is a good income now, and that is a good buying power. So they are jumping because they waited out.
People's financial situation, correct me if I'm wrong, this is what I assume, is the majority of their savings is going towards their down payment.
Yeah.
Like they're really trying to take on the least amount of debt as possible. So they're putting up all the cash they really can, maybe a little bit of a rainy day fund. Yep. And then they're just like, I'm going to make those payments every single month because I have this job.
Another reason to look for a turnkey house as well, because you've got nothing left for anything.
There's nothing left for anything else.
Not even a sofa.
So, that changes things too. And I think one thing that people are overlooking is just the effective rates. I mean, we know it's 12 to 18 months, right? Before we see the full effect. The effective people right now, like you had said, hearing the most recent announcement, let's say they're on an adjustable rate. Let's say they need to renew, whatever it is. their mindset changes. They don't go out and eat as much. They don't want to go and buy a car. They don't want to go and do the spending that they thought. Maybe some people who were planning on moving aren't. We have 40% less people moving right now. There's less people moving.
Yeah.
But there's people out everywhere all the time.
There's less listings though. So that's the thing. Oh, you mean
they're out spending money. Like, do you think people are
but
not
that
spending?
changes though. There's maybe some people aren't affected, but there's a group of people who are definitely affected. And I believe that this takes years to be able to work through the system. And I think that it's really early still when it comes to how much impact these rate hikes have had on the economy and on homeowners. That's my opinion.
So, but the same thing, the same question is, what stops prices from going up right now? Like more interest rate, like another quarter point. You really think that's going to change the sentiment around here? Oh boy, now they're really serious now. It's another quarter point. Like, we've had bazookas blown in our faces at short range, and yeah, like it slowed things down a little bit. Market came down, but like it doesn't seem like anything changed around here. How many offers on your last listing over the last couple of days, TK?
I sold a condo. It had 2 offers.
2 offers on a condo. Where's the condo?
Yeah. Scarborough Town Center.
Right. Like, okay, so that's good action. Okay. More than one person willing to buy it on the first day. Right. Yeah. So like, and you didn't price it super low. You said you were pricing it right.
Yeah. It's just, and it was a dump too. So it was like, the place needed, like, the whole thing had to be changed over. It was tenanted, and there was crayons on the walls from the kids and different things like that. It was a seller, it was definitely, looking to get the property sold, like it wasn't, one of those situations where people were really financially happy and everything was going great, and they thought, it's just a good time to divest. So I think that the people who are selling who are in trouble are getting bailed out by the market again. That's what I'm seeing.
Right.
They're getting bailed out, and maybe it's not bailing them out as much as they'd like, but it's enough to be able to kind of get them through what needs to happen and how their life is going to change afterwards, because the worst case scenario didn't happen. That's 100% sure. The worst case scenario did not happen. And I bet you on all the new construction stuff that we're going to start seeing having to close soon, the banks and or the builders will all find a solution to make this work.
Yeah. Did you see the builder in BC? Their new plan? Apparently, it's not a new plan out there. Okay. They offered to do. You put like 2 deposits of $5,000. These are for a new townhouse. Okay, 2 deposits of $5,000, and then when you get occupancy, you start paying a fixed amount that counts as your deposit or your down payment for a year. So they split up your down payment over a year, and they count it every month as like your rent and your down payment
contribution. Yeah.
And then I imagine in a year from now, they're going to have to lend you the money for the mortgage too, so you can afford the down thing.
Well, that's right? Exactly. Those are the ones that are just selling now. I'm talking about the ones that sold in 2022, where we're having all those issues, right?
Yeah,
where
you're going to see
the builders
VTBs,
were,
crazy
sitting in the media there. Those guys there are going to find solutions to be able to get those people in their homes. They'll find a lender. They'll say, okay, you have to go with RBC, and this is what the product is, and there's going to be a co-ownership agreement. There's going to be a second mortgage. There's going to be something that the developers come up with.
I saw something interesting yesterday. It was an interesting solution from a developer well, I guess they're not going to close these units. Did you see the fire in Vaughan yesterday? Did you hear about that, Mark?
No.
Oh, wow.
No.
Brand new
fire,
like unbelievable rager in a bunch of new houses being built. And these are like, they're like 2 million plus, these houses. So
yeah.
High probability that people were going to have a tough time closing these things if they did get finished anytime soon. So the timing
think about
is impeccable.
Like, I don't think it would have been the developer, because I think the developer's got too much to lose. But think about it. You're a buyer. Your life is about to be ruined.
You think one of the buyers lit the place up?
Of course I do. I told you there's a solution for everything. The buyer's like, man, I can't close on this. Look, nobody's there. It's the middle of the night. No one's going to get hurt.
TK. Somebody's going to think this is a great idea now.
This is going to cost me so much money. My wife is going to leave me. Oh my God. I better just go over there late at night. Honey, I'm sleeping.
Honey, I'm going for a cigarette. I'll be right back.
Right? Think
Sneaking
about
in with the
it.
jerry can.
Why are you wearing all
Yeah,
that
and these things,
black?
Mark, went up in flames.
It
Oh
was
my
pretty
God.
quick.
I
Yeah.
can't
Like-
believe you didn't see it.
It's like it was like a bonfire, like, you know, at a campsite.
Insanity.
Wow.
Yeah.
It's all just wood framed houses, right? It's just
Yeah.
crazy.
Wow.
So, anyways, we'll get to the bottom of that, I guess, eventually.
Yeah.
So how else? Your last video there, you're talking about rates higher for longer. What else did the Bank of Canada say in their announcement? What else were they leading towards?
Yeah, it was higher for longer. They were questioned about the government, whether or not government spending was
Inflationary.
it was inflationary, and they kind of dodged the question. And
Why would someone ask that question? Like, why would they be asking the Bank of Canada that question?
I'm guessing for the headline. Right?
No, hold on
yeah.
a sec. No, it's not for the headline.
You don't think that's why they ask?
No, it's because the government's pumping money into a system that the Bank of Canada is trying to remove money from, right? So they're fighting
agree.
against each other. It's like, what are you fucking assholes doing? We're trying to lower inflation and you're giving these idiots more money, and you like it's like a two-headed monster that doesn't agree with itself, right?
Oh, I agree. But you watch these reporters,
Yeah.
and they ask these questions like they're not going to answer the question.
Oh, I see what you're saying. Yeah, the guy's
that's
posturing for attention.
Exactly, because he's not going to go against the government.
Yeah.
The headline's going to be Tiff Macklem says Trudeau's
Can you imagine
spending us into the poorhouse, right? That's what the reporter wants, but
right.
He's not going to give it to you. So it's funny watching their faces because it's like a little battle between them and the reporters when we all know what's really going on, right?
Yeah.
Right.
It's like the guy in the radio show when he calls into like the call checker. He's like, yeah. I'm just, I'm supporting, the fact that, traffic is going to be improved in the downtown core. And they're like, oh, let's let this guy on the air. But then when he gets on the air, he's like, you screw you.
Penis.
That's what happens with the reporters. They're like, yeah, no, I'm going to support a question for sure. But he comes in there with it swinging, right?
And then he asks whether or not the wage increases are going to be inflationary. That's what the other reporter asked. And again,
the wage increases,
yeah, like that because the CRA is going on strike and all the unions, right? There's major wage demands, obviously.
Government workers.
Yeah, exactly.
Yeah.
And again, they're not going to answer the question, but they still go at him for it. So it's entertaining to watch these things, I find.
So what about Stephen Poloz? I don't know how you say it. Paulos?
Yeah.
Stephen P, the ex-Bank of Canada chief, right? Isn't that who he is? Yeah.
Yep.
So he was just interviewed this week and he was like, Bank of Canada's for sure going to be reducing rates by the end of the year. Like they're going to have no choice. Did you see that?
But he's in the
I saw the
private
headline.
sector.
I didn't read it.
Yeah.
I don't trust anybody when they go into the private sector. There's billions of dollars that people have to make, so when they come out, anybody who says anything about the market, when I see that they lead like a hedge fund or something, I'm like, whatever, like they need
where do you think he started before he was the chief of the Bank of Canada? You think he was like just working at Metro or something?
Yeah, but what I'm trying to say though is a lot of them worked
like,
in Bank of Canada jobs for years before they get there. But the main thing is like anybody who it's just pumping. It's like a realtor pumping the market on YouTube. You can't trust those guys. Come on, seriously.
Who can you trust now, other than Mark Mitchell? Mark Mitchell,
right?
you
Mark
can
Mitchell.
trust, right?
Go to
but
his
listen,
channel.
But this is the thing, okay? So you may trust me or Mark or TK or anybody else on YouTube, and we may think we know something based on the data we're looking at. But the honest to God truth is, do any of us even trust the data anymore? Like, how do I know I make predictions and they're not based on data at all. They're based on like being in touch with the market, talking to TK every couple of days, talking to guys like you, like being in tune with the actual market. Because when I talk to TK, I get a totally different story than I see on certain channels. And then if I go on TikTok, well, holy cow, there's a whole other world going on over there, right?
Yeah.
So it's like, how does anybody make a decision now to do anything really but to like buy $1 million+ something house or condo that won't be ready for years at rates that we don't know if they're going up or down? We can't trust anybody. How the fuck do you guys, I mean, I don't advise anybody, right? How do you guys do this?
I mean, you lay out the facts, right? And you say, but ultimately, my crystal ball works as well as yours does. So
right.
I always say it's got to fit the budget and you have to like the home. If you don't, you know, then that's a major risk, right? It's always a risk no matter what you do. So I mean, I try to read as best I can, but I could be wrong. They might lower rates in December, November. We really don't know. And that's, you know, we look at this data and we look at just Canadian data. Then there's the globe, then there's the US, then there's the globe, right? There's so many exogenous factors that could throw everything out of whack that we really don't know. So
and every government is so full of shit. So like you get this
yeah.
like grouping of data that's a bunch of lies, and you know, all this propaganda that goes out that says different things from different places, and we're supposed to be like, yeah, I feel totally comfortable
what's gonna
buying a
happen.
$2 million house that
Yeah.
won't be ready for like, I don't know, 8 to 15 months. And yeah, let's do it. You know what? Actually, I was thinking about it. I'll take 2, please. Let's go. Right?
Do you ever like kind of like fantasize, Mark, where you're just like, man, back in November 2021, I should have had everyone lock in a 5-year 1.99 fixed mortgage, and I would have been like, you know, on a roll, you know, like,
Right.
because I'm sure there was people who you dealt with who made their decision to get a variable rate at some point over the last couple of years, and you know, it's part of, you know, when you're running a successful mortgage company, this is what happens. It's like in real estate, you know, there's people who I sold their house back in 2019 because they thought the market was going to go down, and now, you know, there's $300,000 on the table they could have got if they kept that rental property or something like that, right? Like you just don't know, right?
Well, I mean, I was advising fixed for most of that time. So I didn't have a lot of clients in variable. So I bet right back then. So
yeah, but somebody must have
maybe I
got a
got
variable
lucky.
rate. Somebody must have said to you, you know what, I'm going to get a variable, Mark. Thanks for your advice, but I'm going to go variable on this one.
I had 2. I did 2 variables.
Those 2 guys, then those 2 guys.
Yeah.
What if we could only go back in time
hell?
tell those guys
What are their names, Mark?
Right.
What are their names?
All right.
Yeah.
This is trouble with a capital T, you know?
Oh my God.
But you can't.
No, you can't.
What about the poor people that had like a 3 or a 4, like a short, like a medium term 1 point something %? They thought they were geniuses, and now like, oh my God.
Yeah.
Oh, that's worse than like having a 3.25 for the last 8 years or something and coming up on it, right? Now these poor people, all these people made these decisions with rates being lower for longer. Even those are stupid. Like, how much longer?
Well, I mean, I would imagine that the central banks are going to be very aware of that come 2025, 2026, right? So I think there's a good bet that one way or another, we're going to see low rates by then. Because they're going to know that we're going to have an avalanche of people that had 1.5%, 2% fixed for 5 years at ultra high prices. So I'd imagine that they're well aware of that problem that's coming up.
One thing that I've been sort of like hyper aware of because of this one change. I've always known it because, you know, the data supports it, but rates and prices are not always working in tandem. Just because rates go up, it doesn't mean prices go down, and vice versa. You know, there's so many other factors.
Yeah, and I heard that a while ago that that's actually what happens. But I was like, that sounds pretty dumb. That can't possibly be right.
But I mean, we're right now. I mean, the rates are obviously, they got some good 5-year fixed insured rates and all that kind of stuff. But rates have been pretty stable for the last however long, and you know, you've got prices going up again. That's what they're doing.
So much of it's psychological, right? When the hold came, when the pause came from the bank, people said, okay, this is the worst is over. Time to jump in.
The floodgates just opened. That was the signal. And we said that for a while, is like, just wait for them to, like, everybody called it a pivot, but I guess you didn't need the pivot. You just needed the brakes, like just the brakes, right? You just needed to change the pace a little bit. Because I think, like you, I mean, I think there's still a lot of people going, I don't know if we think that they're going to go up, but we're all sitting here going, well, you know what? Like, if you really want to fix the problem, they really should go up, and they should go up soon and probably considerably more if you want to fix the problem. And
in short order, yeah.
But if they really wanted to fix the problem, they would not have paused, right? So what are their goals? We listen to their rhetoric. We all focus on every syllable that motherfucker says on his podium, right? But what are they doing? What are they doing, right? So their actions are saying, we don't really care, right? Like,
Yeah.
I think like we don't care about the dollar. We'll let that devalue because that's what happened, right? When they paused and the states dropped or raised again,
That's right.
right? And everybody knew that that was going to happen, so they sacrificed the dollar, and now they pause, and they must have seen momentum in the market like we all did, right? So I don't know if they would only join Twitter. If Tiff would just join Twitter, he'd know what we all know, and he'd
Yes.
be able to make decisions based on reality instead of
100%.
what the fuck are they deciding things based on? But again, if your goal is to really tame inflation, you act differently than they're actually acting, right? So again, I keep asking you guys the same question. I don't think I got an answer. What stops prices from going up? Because they're on, like they're
Mark
in
just
that
gave
trajectory.
the answer in his last reply, which
What was it?
psychological. That's what it is.
But
The
they're trying to
sentiment.
kill the sentiment. They can't do it.
Well, right now there needs to be something else that everyone says when the pandemic happened in March 2020, when they locked us down, everybody immediately was like, whoa, real
Yeah.
estate, bad, you know,
Right.
Yeah.
crash.
But the
Oh
reaction
my.
was money. And that's
When
what's
was
going to
the
happen next
best
time.
time to buy in the last 3 years? March 2020, when people were ready to give you their house because they thought that prices would go down, right?
Yeah.
So it's the sentiment it's the psychological change that is more important. I don't know what's going to cause it, but it's more important than any amount of interest rate hikes, than any job numbers, than any recession. Nothing means anything if people think real estate is a good buy.
But that thing, that trigger, that thing that blows things up, right? Whatever it is, I don't know what it is. It could be a war. It could be a banking crisis. It could be, who knows? Like there's a lot of shit going on. But any of those things, the remedy will be pumping more money into the system.
Yeah.
Right. So like, what is the thing that happens to the system that also doesn't equal more printing? Because anytime there's more printing, we see like anytime there's more reason to print, prices go up, regardless of what rates are doing. Right.
Yeah.
And it's the saving grace, which I believe they know. So
Yeah.
are they trying to force prices up right now? Because they know they're going to lower rates. Like what the fuck are they really trying to do? Somebody tell me the answer, guys. TK, do you have the answer?
No, Mark, what's your opinion?
My guess is there's a delicate balancing act that they're working on. They can't. They have a real problem raising rates more than they already have. So they kind of, to a certain extent, couldn't go much higher because we're in so much debt. Canadians, or a portion of them, the household debt to household income is like at an all-time high right now. So you've got that one portion that you really have to worry about because if they stop paying their bills, that's a real societal problem. But on the other hand, you got this: what happens when you do pause? You cause the other half of the population to say, okay, well, it's over. If something happens, the bank's going to bail us out anyway, and the worst of it, it's over. So it's time to jump in the market. So I think you have two very different sets of the population that you're trying to balance out what they're going to do while you try to fight inflation, while you try to get those prices back down. And it's very difficult. They want people to stop spending. They want to induce fear, but the effects of that inducement they're felt very differently by different portions of the population, and I think they're well aware of that. So they really are in a rock and a hard place between trying to get these three things to work together.
Osvi,
If that makes sense.
you meant, yeah, for sure. I totally agree. I can sympathize with them because it is a challenge. Osvi, you mentioned that they had made an announcement about, their concerns with the amortization periods and stuff like that. What else? Like Osvi, they were talking about a lot of different things. You had that geez, I can't remember now. There was like a Geneva something, they're announcing about loan to value or on the HELOCs and buying investment properties. We got the stress test. What else has OSFI been talking about? And where do you think OSFI goes from here? What type of changes do you think that they would be implementing this year?
So there's three big changes that they're talking about that they started talking about in January, and today's actually the last day, or sorry, Friday was the last day for consultations. So one is higher loan to income standards. So say you make 100K, your max loan amount would be 450. They're also talking about having it so the banks can only have a certain percentage of high ratio loans on their books. So right now, your gross debt to service and your total debt to service, TDS and GDS, are 39 for GDS and 44 for TDS. The total amount of debt that you can service based off your income. They're talking about lowering the amounts that the banks can hold on their books of those, say, 35 to 39% GDS loans.
Okay.
And then they're also talking about higher standards for shorter term mortgages. So variable rate mortgages right now are qualified in the same manner as fixed rates, but as we're seeing, they're far more susceptible to swings, right? So they're talking about making it more difficult to qualify for a variable rate mortgage.
Okay.
And those are kind of the three biggies that they're considering.
So that's all there, just reduce risk with the banks and stuff like that.
Yeah.
Do the main banks, I know normally like they're kind of reluctant to be allowing a second mortgage. Is that still the case? Do the A banks allow second mortgages? No.
A lot of them do. Yeah.
Do they?
Yeah.
At the time of purchase?
Not at the time of purchase. No,
Yeah.
later on.
Yeah,
Yeah, you're right. At the time of purchase, they don't.
Right. Okay. So, and do we see that maybe loosening up a little bit? Like there's got to be people out there that are willing to take on this risk. There's definitely a gap that needs to be bridged because prices aren't going down, they're going up, and affordability is going down, and wages are not really going up like enough to make a difference right now. So like, is that one of the next kind of tools that we might see?
To reprop up, to like put more fuel on the market?
The issue is the debt servicing, Darryl. So like if someone can qualify for that second mortgage at the same time, then the bank would be happy to lend them the money. But the bank and what OSFI is announcing is, well, if we're already giving you the max, then you having another debt on top of that is just going to be put you over.
Yeah, but qualifying and being able to afford are not the same.
Well, they are in the bank's minds.
I know. And that's why I'm saying like there's a gap that has to be filled. So are they going to allow this maybe market to materialize where people will put seconds so that houses can close?
Well, OSFI is talking about making it more difficult to get money, not less, right? So if you do borrow your down payment through a second, then that money has to be worked into the debt ratios. Right.
But they want it to get tighter, but the banks are increasing amortization periods.
Yeah.
Right. So it's another two-headed dragon that doesn't give a shit what the other head says, right?
100%. So you've got the banks doing these amortizations. You've got OSFI coming in saying that's good, but this is more risk. And then you have the government wanting the banks to do these extended amortizations that we heard about in the budget. So I don't know how these three things mesh.
My opinion was that, or my idea, or whatever it was, my thoughts were that there was a max amortization that was imposed by OSFI at the time of purchase. So does it not apply at refinance? Is that's why they're doing this?
At the time of purchase, it's 30 years.
Yeah. And there's no way for the banks to change that
years.
Because of the law in Canada.
Correct.
Yeah.
Right now it's maxed as 30.
Yeah.
When we talk about them increasing to 35, 40, that's midterm. That's just on paper, right? Not actually written into the contract.
Now, so midterm, okay. Renewal though.
Right.
Again, has to be 30.
Right now, it's supposed to snap back to the original amortization or 30 years.
Okay, so I'm 4 years into my 5-year term. I go and I get, a variable rate, and that I was paying fixed payment variable rate, or static. And then as the pandemic and everything changes, my payments go up and up and up and up. And then instead of the trigger rate, they say to me year 4, hey, listen, you can't afford this payment anymore and it's crazy. So instead, we're going to tack on either negative amortization or we're going to have a long 40, 50-year amortization. But as soon as my term is up, it'll be the law that the bank can no longer give me more than a 30-year amortization, and there will be a max TDS ratio that they'll be able to give me, and there'll be nothing that the banks, as according to the current law, can offer that client. to be
Right.
able to help make their payments lower.
Right.
It's just the midterm sort of loophole that allows them to do things. But renewal time,
It's
the
supposed to
music
right
stops.
now goes
Yeah.
back to your original AM. So if you started at 25,
Yeah.
at a renewal, it goes back to 20. And
Yeah.
whatever's owed gets amortized over 20.
Yeah.
If you want to bump back up to 30, then you have to requalify. Then that's technically a refinance. That's
Yeah.
changing the terms.
But the
Are
30
we-
is the max. So the bank
30
can't be
right now
like,
is
we
the
want to
max.
keep you in this house longer. And, you know, because of the negative amortization you've had over the last 12 months, right?
Right.
This is what you owe, and you paid way too much when you bought. And you know, you whatever, you know, you're just not able to be able to qualify for more, and your job's changed. So
Right.
there are scenarios where the bank's hands will be tied. And
Right
they'll tell
now-
people we can't renew it right now.
Well, so
why,
what
why you're
about
saying that is though something could change as far as what OSFI will permit on refinance and purchase.
Yeah, right now, all of the banks, all the A lenders is 30 years, but the guidelines coming down from the government are saying that consider longer years. They're not clear yet what they're doing, but
for
Mm.
amortization or
for
term?
amortization. For amortization.
Watch, term is next. We're going to start seeing 12, 15, 20-year terms. It has to happen. Listen, if the Ponzi scheme doesn't continue, the whole thing falls apart. There is some serious brain power trying to figure out how to keep this thing going. Nobody's trying to figure out how to blow it apart. They just want to blow the top off and like not make it so crazy because it's so crazy, but they're fucking it up worse right now. And it's not going to get better. It is not going to get better. I don't hear any way that prices are going to start trickling down again without a big explosion of interest rates. Another giant blow, because the first one didn't do it. And so, holy cow, are we looking at like another Volcker moment where somebody has to come in and just go, fuck, man, like this is not working. These guys are fucking idiots. They're still buying stuff. They're multiple offers. They're buying Ferraris. You know, they're out at the theater. They're out at the restaurants. They're not getting it. We got to do something because this is a runaway train. Because there's zero. How does CPI come down with housing prices going up? Is that even a possibility? Unless they weight it differently, or they say, you know what? We decided now housing, not in any basket, guys, out of the baskets, gone, housing gone, and energy, food,
core
gone.
inflation. I think then that would be true. But when they are looking at gas prices and food costs down in the States, food costs came down, and the things that were going up. So like cost of goods are going down, right? So cost of goods, people are buying less goods. But the services, there's still inflation, which affects core inflation. There's services, people are going out to eat, and people are going out to, I don't know, do things that involve humans. So there was still whatever they call it, sticky inflation in those type of areas.
Yeah.
But at the end of the day, housing, you know, in the States has been going down more than what it was in Canada. And I think that's why they're continuing to push to try to get inflation back on track.
Well, they are actually acting like they're trying to, right? And they're going to keep hiking. At least they're saying they are, which we were doing before too. And then we just said, we're going to pause. So, okay. So guys, it was nice talking to both of you. I don't feel like we figured anything out, but
I do.
I think, well, but I don't think it's possible. I think like there's some really smart people trying to figure things out. Not saying that we're really smart people, but a couple of us here are. And it's not easy. So like a normal person who just wants to own a house must be like, holy, like what the fuck is going on out here? Like it's no wonder young people are just giving up on the idea altogether, as it's just not a realistic option. I guess unless you go to London makes a big difference, because I'm not
London's a
kidding.
great place. I know a good
Great
mortgage
place.
broker out there.
100%. So
Mark, believe it or not, there's a couple people, I think there's like 30 or 31 of the people who watch our video who don't watch yours. I think for the most part, everyone on our channel is watching you.
has
But
to be.
just give a little bit of a shameless plug, just so people who are listening on Spotify and stuff can go and check you out. Where's your channel? Go ahead.
It's Mark Mitchell, mortgage broker, London, Ontario, on YouTube. Be happy to have you. Yeah.
Awesome. Really good content. If you want to follow the market, and actually learn something, go to Mark's channel. If you want to waste an hour of your life every Sunday at 4,
Stick
keep
around.
watching right here. But we
Stick
appreciate you guys. Like, comment, and subscribe, and we'll see you next week.
And hold on, Mark, can you take us out with your famous line?
Thanks
For clicking.
Thanks for clicking. Yeah, if you guys want to get further updates from TK and Darryl, make sure you click like and subscribe. But for now, thanks so much for watching.
Yes.
Beautiful.